Welcome to The Explainer. So, a crypto company backed by Donald Trump and his family just made some really massive headlines. They received conditional approval to establish a national trust bank. Now, that headline alone, absolutely explosive. But to really get what's going on here, we kind of need to look right past all the political noise, because this isn't exactly the traditional bank you might be picturing. Let's dive right in by looking at three specific numbers that perfectly frame this entire story. The very first number you need to know is $4 billion. Yeah, billion with a B. This is roughly the market capitalization of World Liberty Financial's stablecoin, which goes by the name USD1. That is a massive, incredibly significant digital asset to have right out of the gate, and it really sits at the absolute heart of what this company is trying to build. Now, that sheer scale gets intensely magnified when we bring in our second number, 38%. According to reporting from Reuters, 38% is the ownership stake in this venture held by a Trump-affiliated entity and family members. And it's exactly this percentage that takes what would normally be a niche financial infrastructure story and turns it right into a heavily debated, politically charged national conversation. And finally, that brings us to our third number. $20 million. This represents the minimum capital requirement attached to their proposed bank. Okay, stop and think about that for a second. Putting a $20 million requirement right next to a $4 billion digital asset totally sets up the central mystery for our explainer today. Why does World Liberty Financial actually want this bank charter? And why has this single move triggered so much immediate, intense attention from lawmakers, regulators, and financial watchdogs? Well, to answer that, we really have to understand what technically just happened. The Office of the Comptroller of the Currency, usually just called the OCC for short, gave World Liberty's proposed World Liberty Trust Company what is called a conditional preliminary approval for a national trust bank charter. Now, I really want to emphasize that word conditional because it's absolutely crucial here. This isn't just some announcement saying World Liberty can instantly unlock its doors and start operating tomorrow. No way. They still have to satisfy some really strict regulatory requirements before they can actually move forward with anything. And this perfectly illustrates the biggest public misunderstanding about this whole event. When we hear the word bank, we naturally imagine your classic, traditional commercial bank, right? Places like JP Morgan or Bank of America. Institutions that take our deposits, hand out loans, and manage our mortgages. But actually, scratch that, because that is not the business model being proposed here at all. World Liberty is setting up a national trust bank. Their entire structure is heavily focused on digital asset infrastructure. We're talking about activities specifically connected to crypto custody, stablecoins, and the specialized financial services that surround them. Which brings us right back to the absolute most critical asset in this entire narrative, USD1. Now, if you aren't super familiar, as a stablecoin, its entire mandate, its whole job, is to maintain a flawless one-to-one peg with the US dollar. So one regular US dollar exactly equals one USD1 token. It's designed specifically to avoid all that wild volatility we usually associate with a crypto market. So let's bring that impressive $4 billion number back into the picture for a second. Because USD1 has grown into such a major digital dollar project, the infrastructure supporting it has to scale right alongside it. It's like a giant machine that needs a much bigger engine. You see, going after this bank charter isn't just about the prestige of having the word bank in your name. A regulated bank actually becomes a crucial piece of machinery. It brings all those essential behind-the-scenes functions surrounding the stablecoin into a formally regulated financial structure. It's all about supporting this rapidly growing digital dollar business. But of course, we absolutely cannot ignore the politically explosive side of this. Going back to that 38% representation of the reported Trump family stake, critics are immediately raising some really tough questions. They're asking, what happens when a company with a substantial financial connection to the president gets approval from a federal financial regulator that operates under his administration? It's a dynamic that instantly triggers some very serious conflict of interest concerns for a lot of people. However, as we look at this, it's vital that we separate the political noise from the actual regulatory reality. A conflict of interest allegation raised by a critic is simply not the same thing as a finding of illegal conduct. The OCC operates under its own totally independent regulatory process. And remember, their approval was conditional. The OCC is really just answering a structural question here. Is this specific type of trust bank charter legally available to a crypto company? That is entirely separate from the critic's political question of whether a company with these specific ties should receive one. Right now, those two very distinct conversations are just colliding head-on. Now, when we put those two financial numbers side by side, the sheer difference in scale is honestly wild. We've got a $4 billion stablecoin market cap sitting right next to a $20 million bank minimum capital requirement. To put that into perspective, that is roughly a 200 times difference. Now, it's really important we don't mix these two up. The $4 billion is the actual size of the stablecoin itself, while the $20 million is just a baseline regulatory threshold. But man, it really emphasizes just how massively larger the stablecoin operation could become compared to the bank's required initial capital. So you might be wondering, why go through all these intense regulatory hurdles just to get this charter? Well, because controlling your own financial infrastructure from start to finish is incredibly valuable. By establishing a trust bank, World Liberty gets to control a vast sequence of events. We're talking everything from the initial USD1 issuance down through managing the reserves, holding custody, processing redemptions, handling everyday payments, all the way to operating as a fully regulated financial infrastructure. The more of these internal steps the company can handle itself, the less dependent it has to be on outside financial providers. It's a real game changer for them. And honestly, that is exactly why this story matters so much, far beyond the political connections. We are looking at a fundamental shift in how finance actually works. Think about it. The traditional system relies on a bank initiating a payment, which eventually leads to settlement. But the crypto infrastructure, it relies on a blockchain moving a token to execute a transfer instantly. Stablecoins sit perfectly right in the middle of these two worlds. They're designed to combine the absolute stability of a traditional fiat dollar with the rapid transferability of blockchain tech. Companies like World Liberty are literally trying to build the next generation of digital finance infrastructure right at this intersection. Naturally, the financial markets are completely split on what this all means. On one side, you have the bull case. This view argues that digital assets desperately need a clear, legitimate path into the regulated financial system. If USD1 continues growing, having a regulated trust bank structure could help them provide a lot more services, ultimately bringing crypto under way better supervision and achieving massive, massive scale. But the bear case is just as prominent. Just because a stablecoin is growing doesn't magically guarantee a profitable empire. The competition out there is intense. Traditional banks are already entering the space, the regulations are constantly evolving, and of course, World Liberty faces the highly unique challenge of immense political scrutiny, which naturally carries a ton of reputational risk. So what does this all mean for us? What should we actually be watching moving forward? Honestly, forget the initial flash of the headline. There are 4 key metrics that investors and markets are going to be tracking closely. Number 1, USD1 growth. Does the stablecoin actually continue expanding? Number 2, regulatory approval. Can World Liberty successfully satisfy all those strict OCC conditions we talked about? Number 3, political scrutiny. Are lawmakers and watchdogs going to keep challenging the relationship with the Trump family? And finally, number 4, adoption. Can they actually turn a really large crypto asset into a practical platform that everyday people use for real-world payments? These are the questions that are absolutely going to dictate the future of this venture. Because ultimately, the biggest takeaway from this explainer isn't just about one single company getting a charter. It's the fact that crypto is merging deeper and deeper into the traditional financial system. Stablecoins are literally becoming foundational infrastructure, which leaves us with one final, pretty fascinating question to ponder. If USD1 keeps growing like this, and World Liberty gets this banking infrastructure fully operational and totally past the regulators, just how big could this financial empire become? Because looking at the mechanics we've explored today, $4 billion, that might truly only be the beginning. Thanks so much for joining me for this explainer. Keep learning, and I will see you next time.